Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll be your host while I dive into this week for the markets, financial markets. We're going to take a look at the futures markets for a little bit and then also in the stock market. So welcome, welcome, welcome. And just a quick reminder, we are not registered broker dealers or investment advisors. We're looking at this information from an educational standpoint, not telling you to buy, sell, or hold any particular securities, giving you personalized recommendations. Past performance, no indication of future results, and there's always a chance of loss when you put money into the market. So keep that in mind. We can manage risk, we can try to mitigate the risk, but we can't eliminate risk. And we're not subject to trading restrictions, so we got a position of security and issue one at any time. Please, please, please stay in touch with me. I'd love to hear from you. Give me some feedback and possibly some securities you'd like me to look at. You can hit me up at brandonwendell.cmt@gmail.com. Also, send in suggestions if you like for new chart school editions. I'm going to be sending out some more free videos where, again, I dive into education and give you some free education on the financial markets. That's called the Wendell Effect Chart School, and there's plenty of videos already available. Don't forget to hit subscribe and like. That helps us out greatly. That way I can continue to provide you with this information on a weekly basis. You can also follow me on Twitter at TraderBDub. I am with the blue little check mark or whatever verified, so make sure there are some copies out there. So unfortunately some people are mimicking me. There's only one me. Probably a fortunate thing there, but anyway, you can follow me there on Twitter, and of course you can follow us here on the YouTube channel. Anyway, for today's schedule, pretty typical is what we normally do. I'm going to go ahead and take a look at the weekly market analysis for the equity index futures, dive into energy futures, sector analysis, and then individual trade ideas on the stock market this week. Got a few of them for us. So without further ado, we're going to dive into weekly analysis for the equity index futures for January 22nd, or the week of January 22nd. Anyway, on the weekly chart of the ES, we're at a crossroads. I've heard that a lot. We've been back and forth. It's interesting. When we moved down recently at the end of 2022, we did not make a new low. Okay, and if you look back for 2022, we continuously made fresh lows. So that was the first time that we didn't make a low. And that's a warning sign that, maybe the bottom is in. Okay, I'm not really claiming that it is. I see that the economy is still very fragile. I personally believe we're going to make some fresh lows in the new year. It just may be a while. We might actually make a high first before we break down, kind of a false rally before we drop again to kind of get some more money in the markets. Anyway, we'll see. What's happening here on the weekly chart, again, we didn't make that new low. We still haven't made a high yet. But if we do break out above the 40.35, this is an indecisive candle with a little bit of bullish pressure. So that would tell us, for the following week, on Sunday going into Monday, if we break above 40.35, we're probably going to be bullish for the week. Doesn't mean we're going to take out the prior high back here yet at 4,200. Okay, I don't know if that'll happen this week. It may, if we become very bullish, obviously. But basically, we've lost momentum in both directions. The concern was we didn't make the low, we didn't get bearish momentum to actually go down. So that means that we have the possibility of rising, but we don't really see bullish momentum. Of course, this could all be for naught. It could just be a pause before we continue lower. And if we do see this week we break 3,900, then look out below. There's nothing really to hold us up below that. Looking at the daily chart on the ES, it actually does look a little more bearish. We hit this little daily supply and fell. However, two things. One, obviously we didn't get into bullish territory when we moved into supply, but on the retest, all of this selling pressure that was here has been removed. We're going to deal with the higher area that we should be moving into if we do break the highs. But we also didn't go below 40 on the move down, and we failed to make a new low again. So on the daily chart, we're seeing that shift between bearishness that was dominating 2022 and now a possible shift into a little bit more buying pressure. So be careful there. Again, it's not proven yet that it's going to be going up, but we're definitely not declining quickly as we have in the past. So we may see a little bit more choppiness and sideways movement this week coming up. Even if we do break to the upside, it's going to be a very slow grind, I believe. On the 4-hour chart, we did hit a demand zone and bounced off of the 4-hour demand after we had bounced away from the 4-hour supply. Saw that big move down earlier in the week, bounced off that to finish off the week. And, we still didn't get above 60 here on the RSI. So that doesn't show us bullish momentum as we tried to rally. It might have been interrupted. If we can pick up and continue higher, then there's nothing to hold us down to make new highs this week. But like I said, it's not really a convincing bullish run. The momentum wasn't really there. The volume wasn't really there. So be suspicious of it. But if we do end up opening up on Sunday and Monday going down, there's no demand here to hold us anymore. Most of that buying pressure is gone, and we'll hit the 38.42 before the end of the week. Looking at the way the markets have been going, since the lows we made in October, the leader to the upside has actually been the Dow, while the Nasdaq and the Russell have been very, very weak. As you can see, their leaders down while the Dow is leader up. So we really want to kind of see, if we're going to continue to move higher, does the Dow have the power to push us, or is something else going to take over? If not, then we're likely to drop, and we can look to the Nasdaq to see how far we're going to go down. So I've got the Nasdaq next, and you can see how much weaker it is. We're nowhere near close to making some new highs. And yes, we failed to make a new low here at the end of 2022, beginning of 2023. So that's the first sign that a bottom might be getting put in. But once again, we still have a long way to go to break out of these highs, and there's still a lot of selling pressure overhead on the weekly chart. So if you're looking to go long, the Nasdaq is not what you want to buy. Looking at the daily chart on the Nasdaq, again, it made a move into supply, but it held because on the daily, we couldn't get the momentum needed to break through. Unless we do that on our next test, all we're going to do is fall down yet again. On the 4-hour chart, we did see that we couldn't quite test the demand. There was a little bit of bullishness there, and we actually did move above 60 on the RSI. So this is suggesting that we could push up, test that 11,836. That was supply that hit on the other indexes. It wasn't hit here yet. But again, this is not the one you want to look for the tops. This is the one that tells you when the bottoms are being put in. And when we came in to that 11,301, we held bullish pressure that we couldn't go down through the demand. That's why all the other markets were able to rise there. So this is more of I want to focus. If we do drop again, when we get down to this level, 11,301, if the RSI is below 40, then we will break and see 11,000 even by the end of the week. If not, if we continue to push higher, this will be kind of dragging behind. And it'll be dragging behind the Dow. Here's the Dow. And the trouble we're getting with the Dow is on the most recent high on the weekly chart, we couldn't get into bullish territory and then fell and made a fresh low. Now, a fresh low from the previous candle, not compared to what we had back here. So overall, the Dow is still scrambling and trying to go higher. So, but again, unless we can get above 60 with the momentum on the RSI, it's going to fail. And this is our leader to the upside. Looking at the daily chart, we did go very deep into this daily supply, and we went above 60. Now that we have pulled back, we did not go below 40. That is suggesting that prices should break out to a new high and maybe even reach this 35,655 before the end of the week. If that's the case, all the other indexes will rise with it because this is the leader to the upside, and that's my upside target. And it's actually looking like it wants to do it. Going down to the 4-hour chart, we had a big move down, but we had a positive divergence. I didn't mark it off, but basically what happened was prices made new lows, the indicator didn't, and that was our reversal signal. Of course, so was the Nasdaq bottoming out. Our first test will be this 34,000 level. So watch for that as the markets are moving up. If we get above 34,000, I don't think that we're really going to hold 34,311. That's a very weak zone, but those are stumbling blocks on the way up, and that's going to cause the other markets to pause as they're moving up as well. Remember, this is the leader, but it does look a bit bullish. Just watch out for those two speed bumps, if you will. They can become a wall very, very easily, and that's where if prices are going to stall and fail, that's where it'll happen. 34,000 and then 34,311. Looking at the Russell, this was just along for the ride. It has almost no momentum on the weekly chart. We're going sideways. So whichever way the Dow goes, if it goes up, the Russell will go with it. If the Nasdaq goes down, the Russell will go with it. So it's just kind of following along, unfortunately. There's not much to talk about on it. We do have demand below. We have supply above on the daily. We're not likely to reach any of those during this week unless we sell off quite a bit with the Nasdaq. Then I'd look for a first target be 1783. As far as where to short, there's really nothing on the 4-hour. We got just demand zones below. So we got this small one right here at 1803. The 1780 was where the daily demand is. It's this stuff right here you're seeing. So if we do fall down, this may not be the best shorting opportunity. The Nasdaq has more of a free fall potentially. For longs, I'm liking the Dow a little bit better, although this is number 2 because there's no overhead supply until we hit that daily at 2,000. So we do have potential for the upside moves here if we pull back to demand on smaller time frames. That's all. And as long as the Dow is bullish, again, watch out for those 24,000 levels. So moving on to the energy markets, we're going to start off with crude oil, and this is just sideways. You can see we got nowhere in the movement here for weekly, although subtly we're getting some more bullish momentum. Notice higher low just slightly and higher high. And on that recent low, we didn't get below 40, so we are seeing more bullish activity coming into the market. Looking at the seasonal movement of crude oil for this month, January 22nd to February 22nd, typically we move up 60% of the time with almost a 3% gain. So this should be a bullish month, and that's what we saw on the weekly chart. By the way, if you're interested in this kind of a chart, the seasonality, you can do this on stocks, you can do it on futures, on indexes, whatever you want. It gives you higher probabilities. That's all. It's an odds enhancer looking at the seasonal movements for these securities. You can use my link right here, https www.citizenx.com/about IMREF equals JRF 55W. I'll put in the comments below so you can go ahead and click on the link too. Anyway, it's if you're interested. If you're not, no big deal. Looking at the daily chart, we have a demand zone, although you could possibly argue that's a retest, honestly, of this. But either way, we're bullish. The first stumbling block we'll run into is at 86.86 and then 93.93. So watch for those to stall price as we're continuing to push a bit higher. Again, this should be a bullish month for crude oil. And on the 4-hour chart, well, we missed the best opportunity to buy right there, 78.57. We kicked off that 4-hour demand zone. There will be others that get formed. Watch for them, maybe even 60-minute demand. But watch for the pullbacks to demand to buy. And then overhead target, again, we got 87.19 on the 4-hour. We had 86.86 on the daily, but that's been tested. So we should be able to go up into that 87 level pretty quickly this week. Now, nat gas is a totally different story. Nat gas is dying. It's falling very, very quickly. As you can see, we broke through demand. Not really a surprise. We have plenty of momentum to do it. And it looks as though we're heading down towards 2.217. That's the next target. Looking at the seasonal move, it's a bearish time. You can see, seasonally it drops 60% of the time with an average gain average drop just a little under 3%. So this is typical for this move this time of year. We should see sell-offs. And if we can get any kind of a bounce, we're at a daily demand. I don't think that's going to hold very well. But if we do get a bounce, I'm looking for shorting opportunities right around 4. You can see a whole number 4 be a good shorting op. We might have some intraday ops as well, but I'm looking to go short on this wherever I can. Seasonally, it's just going to dive, and it should. Now, we hit that daily demand, as I mentioned. We got a little bit of divergence here on the 4-hour time frame. That's telling me we're going to get a little bounce. But that's perfect, right? Because remember, we want to get short. Well, we need to rally so we can short. And where's a better area to get short than right here at supply 3.272, 3.332. Once again, you can enter in that area potentially if it looks good. And the target is going to be that 2.217. So we've got a really good opportunity potentially coming up if we can rally into that supply. If not, there may be something on a 60-minute on the intraday opportunity to find another short. But I'm definitely bearish on that gas. Moving into gasoline, that's actually a different story. That's bullish this time of year. And you can see 60% of the time, it actually is a pretty good gain. 4.42%, almost 4.5% for this month. So we'll take a look at that, and that's over the last 10 years. We are right now bumping up against prior highs and trying to change the weekly trend. This is a weekly chart. We made higher lows, and now we're trying to make that higher high and break out. We need to get above 60 for that to happen on the RSI. If that doesn't go above 60, I'm talking about closing above that level. Okay, if we just wick above it, that doesn't mean anything. That's bearish. We need to close above that 2.6673 and have this week's candle coming up close above 60 on the RSI. Then we're for real going to continue to move up. Now, If we get an opportunity, it'd be great, but we already did pull back to this demand at 2.30, so we're going to have to go to smaller time frames to find something along the way, because otherwise we got nowhere to buy. That's it. But it is very bullish here on the daily chart too. We're in a nice strong uptrend. On the 4-hour time frame, we definitely have a demand here at 2.5208 to about 2.5. So there's the drop-based rally. What'll be interesting to see is if this develops into a zone. We have rally, 1, 2, 3, 4 basing candles, and then we're rallying up. If that ends up holding, which it could, because it's a breakout of the prior highs, we kind of broke out, retested, went up, may retest again, then your first target's 2.79 if you can buy in that area. Even if you buy down here at 252, I think we're going to get up to that 279 this week. The question is, where can we buy? But we need that pullback. You don't want to buy as it's already high. You want to buy on the pullbacks. Heating oil is trying to break its downtrend that's been in for quite some time, since middle of last year. We are bullish right now, higher lows, higher highs, like we saw on the gasoline charts. Going into the monthly view here from January 22nd to February 24th, 100% of the time over the last 3 years, unfortunately on a bigger time frame on this one, so it's not the best, but for the last 3 years at least, it's been up with an average return of 7.5%. So should be a bullish week, should be a bullish month. Okay, there's no guarantees there. Historically, again, I wanted to look at what happens. This is the seasonal patterns. We get a little bit of a pullback over the last 5 years, and then February just takes off. But in the last 15 and 30 years, we are pretty much at the bottom of the market on heating oil. Should be seeing rallies going on. That's what the historical patterns are looking at here. Okay. This one is from MRCI, which if you're interested in them, you can contact me. I can get you a discount code for them. They're a little less expensive for seasonal information. Anyway, looking at the heating oil daily chart, we have a couple of opportunities here. We have one at the 29534 to about 285, which is pretty far down. We may not pull back that far. The second one, we can actually look right here where these paused candles, those red candles, we kind of rallied base and rallied up. So 3.18 may become a buying opportunity on a pullback. We do have to watch out for the target. It's tested supply, honestly. We should be able to get through that pretty easily, especially if we have a lot of momentum. So I'm thinking to pull back this 3.18 is a good buy area. Going down to the 4-hour chart, you can see there's actually demand there. And then there's also demand a little bit higher. So those are my possible entry points, either at 32609, 32918 on the 4-hour chart, or right here. That's basically 3.2 down to 3.1608. So keep an eye out for those. On the pullback, I'm looking to buy. And yeah, I might pull some profits off at this 339, just a little bit to book some profits. But honestly, we should be able to go much higher. Anyway, that's it for the energy markets. Now we're going to move back to the stock market and take a look and see what's going on potentially for the sectors this week coming up. Over the last 6 months, it's still been inflation. We've been led by the energy markets. And that hasn't really changed. But, last week, it really died off. It was weird. We were actually being led by consumer services and some technology. So we're seeing a shift where some people are trying to buy the bottom and thinking that, again, the market bottom is being put in. So taking a look at the individual sectors, let's see which ones might be performing and in which way this week. Starting off with the XLY, consumer discretionary, we bounced off a daily demand from 2020 and rallied up a little bit, but we had a false breakout of the sideways motion. I think we're just back in the sideways motion here. So I'm not expecting much out of this sector whatsoever. Typically, when you have a false break out of a range, usually shoot to the top of the range, we stalled out halfway. But we're at the bottom of the range and moving back up, so it may continue to push a little higher. I just don't see us going above 147 easily. On the communications sector, however, this is actually one of the leaders from the last week, and you can see it on the chart. It had that big Thursday and Friday. We finally broke out of a supply zone that we had tested multiple times, so not really surprised there. The problem that we have is now we're making new highs on price, but not on the indicator. You should not be making new highs in price without the momentum growing as well. That's a negative divergence. So we are diverging. We don't actually have a divergence yet. And the reason why is we got to wait for all the candles to actually put in a high. We could keep going higher, but this is a little suspicious. We are very bullish, and we should continue up to 54.35 and even up to towards that 56.5. But we're going to get a pullback first. So look for a pullback and maybe a 4 hour or even a 60-minute demand zone where you can buy to join this uptrend. So I'm expecting just a correction, but continuation. So I think this is going to be one of the leading sectors again for the next week. Looking at the technology sector, it is also kind of at a possible rally point here. As you can see, we had a positive divergence that kicked us off to the upside, but we're failing to get above 60. So that's the big question mark. Will we break above this prior high, and will we do it with more momentum? If we do, then we're going to continue to go to these targets. And I'd be looking for buying on the pullbacks. If we test that prior high, but we don't have the same, or we have the same or less momentum, meaning the RSI is the same or lower, then it's false breakout and look for a counter move to the downside. Basically a trend change. So it looks as though it's going to have enough momentum to get through. That means buy the pullbacks. Again, you could look at a 4 hour or 60-minute chart to buy those pullbacks. Building materials, pretty much same story. You can see it pulled back a little bit, about halfway of the move up, and now we're projecting higher. We actually have some overlap here. This 85 area, that we got 84.75, 84.96. So 85 is going to be a pretty good barrier. There's two different targets at that level. Once again, when we break the high here from earlier this week, last week, we need to be above that level on the RSI. If we're not, then we're going to stall out and maybe fall very fast from this 85 area. If we are able to make a new high on both the RSI and price, then we could potentially continue through to the 87 before the end of the week. On the energy sector, it looks like this sector may be dying off. We are struggling to get through supply. We pulled back, but not much. And again, we're trying to push through that zone once again. The more you spend here, the more time, the more likely you are to get through it. And then we would push up to 97.80. But we are losing momentum, and this may just be a sideways move for the next week. So if we get to break to a new high, again, look to see if the RSI is higher. If it is, then we're likely to continue up to 97. If not, look for the markets to go sideways, maybe even pull back here on energy. The consumer staples are really falling off. We failed to break supply, and you can see why. We didn't have momentum. Now we got plenty of bearish momentum, so I'm thinking we're going to continue down to 69.08 this week. That's my downside target on the daily chart here. We're going to get a retracement first. So once again, look for a shorting opportunity, maybe here at 74.15. It might happen a little bit lower. Again, look for a 4 hour or a 60-minute supply zone to look to short for that sector. Looking at healthcare, this also looks very, very bearish right now. We are just drifting downward, not a very fast move, and there's really no daily demand until way down at 125. I think it's going to be a grind, just kind of drifting downward until we hit 125. The utilities, they're not going to perform well if the interest rates keep going up. That's just not what they do. They perform well in low interest rate environments because they operate on very heavily leveraged business practices. Basically, they issue a lot of debt, and they do it at low interest rates. If interest rates go higher, they can't issue debt, and that hurts their bottom line. So you're seeing that we're testing demand right now. We're right on the cusp of 40. I think we get a little bounce here, but I think 71.11, 71.89 might be a good shorting opportunity to then continue down towards 62.75. So we might be able to get the short in towards the end of the week, but we're not going to hit targets for in a couple of weeks. Looking at the financials, surprisingly strong. And we got a little pullback going on. I think we're coming into the earnings weeks coming up too as well on this individual stock. So keep an eye out for that. We got earnings kickoff. End of January is usually the first quarter earnings, right? So that'll also set a lot of the tempo here. And I'm thinking of, we got Wells Fargo, Goldman Sachs, JP Morgan. They all start releasing pretty soon, I believe, and watch to see where they go. But this is looking bullish right now. We kicked off this low, and our target, look at that overlap from two different projections right at that 37.5 area. So that's my upside target, especially if earnings come in well. So look for buying opportunities on the pullbacks here in the financials. And that is something that normally tells you that a bottom of the market might have been put in when the financials become one of the leading sectors. So be watching for that. But of course, that could all be for naught. Once we break this high, we need to do it with more momentum. If it's less, then be suspicious. On the real estate side, well, real estate is finding a little bit of weakness now. We'll again have to wait and see what happens if we can make a new high with the RSI and break out to a new high, or are we not done retracing? It looks as though we got a nice little demand here at 38 with the 50% retracement. That may be a decent buying opportunity, but I don't know if we're going to have momentum to get to new highs or if real estate's getting a little soft. And this is not really something I want to put a lot of money or weight into this sector right now. So I think we're going to just drift a bit sideways this week. So let's wrap this up and move into some trade ideas. Again, this is just for educational purposes, not telling you to buy or hold anything. We did have Disney as a previous security idea, and you can see that we were going to look for a short as price left the zone. It never did. It went through to the upside and momentum carried. So no harm, no foul. Hopefully you didn't get in on that because it was on this week we were looking at it when this candle was forming several weeks ago and it just broke out. Borg Warner, unfortunately, made it all the way up towards our targets, but forgot to get us in. Just missed my entry. If I'd used the wicks, we probably would have gotten in, but that's not how I do things. So it's okay. And, the RSI didn't lie. I know a lot of people say, wait a minute, Brandon, you're not supposed to buy if it's below 40. Well, no, it didn't make a new high. Made another low right here. Notice we're not below 40. That's when it took off. So the RSI works. Moving along here, App Loving Corp. Unfortunately, just going sideways. I was hoping for a short opportunity at 13 and never got there. It's just drifting. Forget about it. That one. Move on. Young Brands is back down to our entry spot. It made it halfway to the first target, and it's trying to hold right now. I'm not really keen on buying on a second test. We failed to make a new high compared to the previous highs here as we broke out of the zone. I'm thinking if you can get out break even on this, you probably want to do it. I mean, it could go up to the upside again, especially we got this indecisive candle. If we break above 127, if you're not in, that would be a signal to buy if it breaks above 127. And then the target, of course, is still the 134. But personally, I don't like those when you've tested zones deeply twice. It's not likely to work. Netflix was the other one. I was waiting for a pullback. Just never happened. Unfortunately, we've gapped up off earnings, and that's it. It's just going without us. Qualcomm is actually in our entry spot we were waiting for. The problem is that it keeps staying there. We had a negative divergence where prices made a higher high. The indicator did not, so that would have triggered the entry. But you can see we pulled right back into the zone. We still don't have enough momentum to get through the zone. But there's that little pesky E coming up, meaning there's earnings in a few weeks in early February. So you want to be careful with going short here. You may need to take profits before those earnings come out. Altogether, though, this is saying that it should still go down. The problem is that it's spent so much time here that if you're not in right now, I'd stay out. Just because there's been too much time. It should have dropped very quickly if it was going to make it to the targets before earnings. A new trade is consolidated. I think it's CF Holdings. Anyway, so CF Holdings is doing a little bit of a bear flag. You see we had this big pull down. We got the flag coming up. Hopefully we can make it up to 90 for the supply and then drop. And I got my target 78.5 and 64.5 basically. If not, it may just break out of this flag formation. You can trade the flag if you like. But this looks like it's going to go down very, very quickly. It's got a lot of bearish momentum. Dollar General is almost at the entry spot. 231.60 is what I'm looking for, up to 234.49 for a shorting opportunity. You got drop base, drop area of supply right there. So I'm looking to go short, targeting 213.29 and then 201.98. So that's Dollar General. And then finally, of Elevance Health, ELV, also very bearish. You see that we're going to kind of a sideways motion here, not even a flag. If we can rally up to 495.76, I'm looking for a short down to 460.94 and then eventually at 439. I'm thinking earnings might be a catalyst to kind of drive us into that supply quickly before it drops. So it looks like it could be a good short, but I'm going to wait for the earnings release before I actually enter anyway. I want to wait until we actually know what's happening rather than getting in before with the unknown. And I still have to wait for the supply anyway. And let's see, we also have Zillow Group on the buy side here, waiting for a pullback. We're testing a supply zone right now, and we have plenty of momentum, but it looks as though we're going to get a pullback, hopefully enough to get in. I'm looking to buy at 39.13 down to 38.47 with the stop, somewhere around 38.35. Nice little demand zone right there, as you can see, targeting the new supply overhead, about 45.92, and then getting all the way to 51.30 at the next supply above that. So looking for a bullish opportunity once again. Watch out for earnings. That's coming up. I like to wait for the earnings. The earnings, I mean, we're still not there yet for the entry. This is a 4-hour time frame. So we'll probably drift down and maybe get slammed into demand with the earnings. That'll usually cause a big bounce. And another one, Temper Sealy International, TPX, on a 4-hour time frame, looking for a buy opportunity. If we drift a little bit lower, we will probably get into this before the earnings come out in February. We do have 36.42, 36.06 as demand with the stop loss below, and of course the two targets for my next supply zones. So just looking for a pretty simple pullback and a bullish trend. And that'll do it for this week. So if you got any questions, please let me know. I believe, yep, there it is. You can hit me up at brandonwendell.cmt@gmail.com. Love to hear your suggestions and feedback as well. You can also follow me on at TraderBDub on Twitter. Also, please hit like and subscribe. That helps me out a lot. That way, we know you're interested in what's going on here, and I can continue to provide you with this educational information week after week after week. I want to thank everybody for being here. Until next time, trade safe, trade well, and take care, everybody.